3, 2, 1. Welcome SMF Street Traders. Here it is, 9/14/2010. Pre-market hours. We're going into a major earnings season. Number one, the S&P, as far as a bull case goes, is that there is some bullishness here. However, it's going to be the sustainability. Right now I'm at 73.4% on a percent DS. The bullish case for the bulls is that we are above the 10-week moving average. The 10-week is ascending in value. You're above the 50-week moving average. That is the bull case. Shorter term resistances, SMF Street Traders, is that until we can close above that 1130 mark, that's going to be the problem on the S&P. Now, one of the things that I would like to point out about key reversals when they come, as we have taught all of our people when to buy bear funds, when to buy bull funds during cycle trends, and what happens in these cycle trends, and how to use the options market and how to square off your risk. The thing about the S&P 500, I've stated the bull rally case for September. You'd have to go back 60 years to get a September and October can be very volatile. We are going to be monitoring the fact that we're in an options expiration that started September 13th on Monday. It closes September 17th on this coming Friday. And we have an imbalance put and call ratio. The calls have inflated to the high side in the first 2-week September rally. When we cleared above here, when we shorted, what we did was that, and it's all live on the videos, when we filled the rally up here, we went short in August. And we have all of those live trades on the stockmarketfunding.com website. When we got down here and we made price, as I said long before it would happen, that if we held half of the bar right here, which we did, and we started off September, that was the end. When we couldn't break that down bar, half of the SMF breakout bar, let me show you SMF Street, that's where the rally went to the top of that last reversal. Now, the key is that half of the SMF Weekly Pro Trader bar, which is a mathematical calculation that's used in our platform, said we couldn't break price and we went long. We've been long for 3 weeks, and we have bucked the September trend for playing the other side of the short side, buying those bull funds that were beaten down. Now the bear funds are beaten down, and if we cannot close above it, and there's been a lot of short cover rally on low volume, and one of the problems is that we're going to see if we can close above that trend line. And we're going to see if this trend line before the earnings season starts holds right here. That's half of the bar. That's 1084 on the S&P. We've got to take out these tops, meaning that the S&P has to close above 1123 on a closing weekly basis. It also has to consolidate to make a move higher. Now, granted that the weekly buy signal is right here, granted that when we were oversold here on 725, we've come up here in the percent K, we call percent DS here. Now, naturally we're at 73.40 and climbing. The bull case is that you're above the key weekly moving averages. However, just as I showed on the Dow charts, one of these disturbing things, one of the most bearish things on this chart, is that within the 3-week rally, and we're masters at moving averages, monthly, weekly, yearly, daily, minute period, is that we have found always in our trade management, relevant to momentum, is the 20-week cannot be declining, meaning that the whole move is at jeopardy because you need the 20-week moving averages crossing over the 10-week. Look at how the 20-week has crossed over the 50-week. That means that as we move up, that upward momentum is going to be harder and harder to break. And we're going into a major earnings season starting October 4th with much lower growth. And what it means is that I have not seen a trend on a weekly chart that when you cross over and roll over, that the trend will hold without failing. just as the 20-week was declining over here, you can see why they sold off and made that low. So that was the August shorts that we did. This is the September longs back to resistance. This is the true trading range. Now, I'm telling you all that bearish case is right there. You don't want a declining 20-week. Let me give you once again the references is that when you have a good bull trend that's going to last a long time with weekly moving averages, you can see how a 20-week goes all the way up. The minute, and this was a very long rally in 09 and 010, but guess what? The minute that 20-week flattened out, we couldn't go any higher. We put a reversal, we called that, but watch the gradual and incremental red line. That's this red line. Notice how it's descending and keeps descending. Well, like on daily charts with simple moving averages, all the same rule always applies. Is that you've got to flatten out for this trend, and it's going to take a lot of doing here to make sure that half of that bar holds. Okay, and we're up here at a 1, 2, 3, 4, and this is the 5th triple top. Without closing above at least 1122 on the S&P, I'm not going to take out that 1130 where these last major reversals were. SMF Street Traders, it's an options expiration. We'll be in the live trading room going through minute by minute. Just remember, weekly moving averages, a 20-week is very important. You're crossing over the 50. You're just now starting to cross over the 10. It means one thing, that the momentum. So if I got a strong bull rally, I got a medium or weak bull rally, is understanding where that bull rally is. And we have a mathematical platform that does all the calculations, so you know exactly where the stability of those trends are. And like I said, the S&P is when it didn't want to break, we went long here. So that's the range there, that's the range there. And so basically we're up at the tops. And I will tell you, it will be very volatile. And I can also tell you that there are some forward-looking problems up there without a closing price. The minute that I come back down, I cannot decline in the red line. 20-week moving average decline, cross over the 50, that's major. That's where trends are weak. Even though that you've got a short-term low volume short cover rally that produces these moves, that's the mechanical side of the market. What I want people to be totally aware of and coherent is that we're stalling, and we're going to see if we can break that resistance, but the upward momentum is weak based on that 20-week moving average.